Joe. He's 71. Hello there. God's best to you and the staff and all you do. Could you explain the differences between dividends and earnings in our stocks? What do you think, Shannon? Simple question.
Sure. So earnings are what the company actually makes. So to put it very, very basically, a company has revenue. That's their top line. That's all of the money that comes into the company. And then very simply, they have all of their expenses, the things that they pay employees, they pay for materials, they might pay interest on their debt, so on and so forth. And then if you subtract those two numbers to get from each other, then you get what the company made. So the earnings are reported in earnings per share, or EPS, and that's one of the metrics that analysts will use in determining whether the company is operating in a successful business strategy. Dividends are what the company pays to the shareholders. So dividends are declared once a quarter, and they could be based on earnings. They could be based on what the company's making, or they could they could have accumulated a lot of cash and they have to decide what to do with that cash. Do they invest it back into the business to buy more machinery, or to bonus employees, or to make investments in the company that will make the company more valuable in the future? Or do they return that money to the owners of the company, who are the shareholders? So, dividends could be, one of the metrics that's good to look at too is what percentage of earnings are companies returning to shareholders in the form of dividends. They can return money in other ways too, not just dividends.